In this video, we are going to discuss the futures markets as of 10:26 Central Daylight Time. That is 11:26 Central Daylight Time. Sorry, Eastern Standard Time for Monday, June 24th, 2024. Guys, it is our trades back with another video. Want to thank y'all for being here with me. If you enjoy this content, you want to support me, support this channel in a big way, please make sure to like, comment, subscribe. If you're going to sign up for a Topstep, Apex, or the Trading Pit, which are all prop firm challenges, guys, please make sure to use my affiliate link in the description box below. It really helps me out. With that out of the way, guys, let's head over to Financial Juice and let's look at some of our top headlines, guys. So, need to know market risk. Global markets rose on hopes that a key U.S. inflation indicator would confirm falling price pressures, potentially allowing the Federal Reserve to lower interest rates in the coming months. Looking over here at the left side of the screen, which is our economic data calendar, let's look at some of our economic data that came out today. Okay, guys, Singapore Consumer Price Index, that Singapore CPI, came in as expected at 0.7%. Fed's Waller spoke at 0200. German IFO expectations came in below at 89. That could affect the euro. German IFO current conditions undershot the forecast, came in at 88.3. That was below the forecast of 88.5. German IFO business climate came in at 88.6. That was below the forecast of 89.6. UK CBI orders came in at minus 18, which is different than expected at the forecast of minus 26. During the morning session, guys, we had multiple European Central Bank speakers. We had ECB's Nagel spoke, ECB's Villeroy spoke, Fed's Goolsbee, that's the Federal Reserve's Goolsbee, spoke in the pre-market this morning, and the Dallas Fed Manufacturing Business Index came in slightly worse than expected. Forecasted to come in at minus 15, came in at minus 15.1. In 1 minute, guys, we have some bond news coming out, so I'm going to leave the while we're making this recording, guys. We've got the U.S. 6-month bill high yield coming out. We've got the U.S. 6-month bill bid to cover, U.S. 3-month bill high yield, and the U.S. 3-month bill bid to cover. The U.S. 6-month bill high yield previously was at 5.15%. The U.S. 6-month bill bid to cover was at 2.82%. And the U.S. 3-month bill high yield came in at 5.25%, and the U.S. 3-month bill bid to cover came in at 2.93. Guys, later in the day, we have the Bank of Canada's Governor Macklem speaking. The Fed's Daly speaks. The Bank of Canada's Governor Macklem speaks again at 1400. That's in a few hours. And then later on this evening, we have the South Korean consumer sentiment, and we have the Japanese service PPI and Australian consumer sentiment. Okay, guys, let's have a look at some of our other headlines to see if there's anything that is worth mentioning. If you are watching this video on the screen, I am scrolling down here on Financial Juice. If you are just listening to this video, please feel free to listen along. Nvidia stock set to enter correction territory as chip sector sell-off sustains. The 3-day slide in Nvidia shares is on track to shave more than $400 billion off the company's market cap. Israeli Minister Chief of Staff, we are approaching the point where we can say we have dismantled Hamas's Rafah brigade. Okay, guys. Those are all the headlines here on Financial Juice that I'd like to read. Let's head over to Tradingview now and look at some of our market headlines before we get into the charts. Okay, guys, here we are on market news. We are starting with the indices section. Then we're going to head to bonds, futures, forex, and crypto. Okay, guys, from Dow Jones Newswires, we have news highlights. Top global market news of the day, Monday at 11 a.m. Eastern Standard Time. S&P 500 holds steady while Nvidia falls further. The S&P 500 was holding steady to start the week, trying to weather a continued pullback in Nvidia shares. The EU hits Russia with first sanctions on LNG shipments. The European Union slapped a raft of new sanctions on Russia over its full-scale invasion of Ukraine, targeting the Kremlin's liquefied natural gas shipments for the first time. German business sentiment weakens with economic political clouds ahead. The IFO Institute's Business Climate Index fell to 88.6 in June against economists' expectations it would rise to 89.6. Ocean shipping prices are pushing towards pandemic-era highs as congestion swells. Disruptions from the diversions around the Red Sea violence are backing up vessels, with the peak shipping season still looming. Hedge funds made a killing on FTX, then it got complicated. Investors allege former FTX customers abruptly reneged on selling claims to their accounts and are suffering from an age-old affliction, seller's remorse. Holiday travel is booming. Why are airlines doing so badly? It is shaping up to be the busiest summer season ever in the United States and about as strong as 2019's in Europe. Yet both low-cost and full-service carriers are recording far narrower profit margins than they did 5 years ago. Okay, guys. If a company says it's ethical, investors might want to be skeptical. A new study finds the use of, quote, trust words is correlated with a variety of negative outcomes. Okay, guys. So not a whole lot of really interesting news. Let's go through some of our headlines. Brazil investors fear political influence on rates, economy. Eurozone bond yields mixed as German business sentiment darkens. Japanese authorities suffering from brake fade. This is from Reuters. Let's have a look here. The Japanese authorities are trying to talk the weak yen up, and while verbal intervention can trigger USD JPY pullbacks, these are usually short-lived as technical and fundamental factors continue to support the dollar, and the market appears happy to test the Bank of Japan's resolve. Following actual intervention of nearly 10 trillion yen earlier this year, triggering a USD JPY drop from 160.24 to 154.4 EBS prices, the market has recovered nearly all of that move. The USD JPY looks primed to head back above 160, but traders will be wary of official intervention and a second attempt to drive the yen higher. However, until the interest rate differential between Japan and the United States narrows, the yen will remain sensitive to moves up in U.S. yields, and the market will continue to chip away at any recovery in the Japanese currency. The USD JPY dropped to 158.75 from 159.94 early in the European session and has since recovered to 159.44. Levels to watch this week are at 158.02, the 10-day moving average, and the 160.24 high from April 29. Looking here at the chart, we can see a daily chart with an Ichimoku cloud sitting well above that Ichimoku cloud. If you can see that on the screen, a little bit hard to see, but it is there. Okay, guys, these are our index headlines. Let's head over to our bond headlines, see if we have anything here. Trump beats Biden for King of Debt title as market braces for crush of federal bonds. Eurozone bond yields mixed as German business sentiment darkens. Fed's Goolsbee, this is from 2 hours ago from MarketWatch, Fed's Goolsbee lays out dovish case for potential rate cuts and flags a, quote, a couple of warning signs on economy. 2 hours ago from Dow Jones Newswires, Treasury yields rise slightly as markets wait for inflation data. 2 hours ago from Reuters, comment AUD USD, that's the Australian dollar, may breach 70 cents, that's 0.70 if US data cooperates. All right, let's head over to our futures. U.S. corn export inspection. U.S. corn export inspection rate remains elevated. By Kirk Malte, inspections of U.S. corn exports are down from the previous week, but remain well ahead of last year's rate, according to data from the U.S. Department of Agriculture. In the USDA's latest grain export inspections report released on Monday, corn export inspections were reported at 1.12 million metric tons, down from 1.38 million tons reported last week, but up from 550,584 tons at this time last year. CBOT grain futures, that's Chicago Board of Trade futures, are lower in today's session, with corn leading the row crop complex lower this morning. U.S. gold prices. This is from Dow Jones Newswires. Engelhard Corp's base price for industrial gold bullion was $2,335 per troy ounce, down $30 from previous. Handy and Hardman's base price for gold was $2,328.75 per troy ounce, down $6.30. The fabricated form price was $2,584.91, down $7. It's on gold prices. Live cattle rises on lower slaughter figures. That's from Market Talk. Oil hedges higher after back-to-back weekly gains. Okay, guys, this is from Market Watch. Oil hedges higher after back-to-back weekly gains. This was from 9/11 Central Daylight Time, so about an hour and 20 minutes ago. Going to head down to the market driver section here. West Texas Intermediate, that's WTI, and Brent slipped Friday but booked back-to-back weekly gains, extending a bounce off mid-June lows as investors grew upbeat about the demand outlook and remained nervous over the prospect of a wider Middle Eastern conflict that could endanger crude flows from the region. Quote, traders and investors cannot ignore the possibility of Israel's invasion of Lebanon and its ramifications. Anas Al-Haji, an independent energy expert and managing partner at Energy Outlook Advisors, told MarketWatch. Quote, traders and investors cannot ignore the possibility of Israel's invasion of Lebanon and its ramifications. Exchanges of fire between Israel and Iranian-backed Hezbollah fighters over the Lebanon border, along with increasingly hostile rhetoric, are fanning fears of a wider conflict. U.S. Air Force General Charles Q. Brown, chairman of the Joint Chiefs of Staff, warned on Sunday that any Israeli military offensive into Lebanon would risk an Iranian response in defense of the powerful Hezbollah militant group there, triggering a broader war that could put U.S. forces in the region in danger. Aside from developments in the Middle East, oil traders are focused on, quote, inflation and economic growth on one hand, and the U.S. elections on the other. Quote, a hot summer will bring many surprises that will manifest in higher energy prices throughout the world, he said. High prices for liquefied natural gas mean higher coal consumption, not only in Asia but also in Europe, which will be a blow for all climate change efforts. There have been power outages in a large number of countries around the world, and the situation will get worse in August, said Al-Haji. This will lead to a sudden increase in private power generation, will lead to, quote, a sudden increase in demand for petroleum products. Meanwhile, Alex Kupsikevich, senior market analyst at FX Pro, said in a note that crude's price rebound in part reflects the, quote, apathy of U.S. producers. He highlighted weekly data from Baker Hughes that showed the U.S. oil and gas rigs at their lowest in 21.5 years. Production is holding near record levels at 13.2 million barrels a day. Quote, simply put, U.S. oil producers are satisfied with the status quo and seek to balance production at current prices. This neutral American stance is complemented by the actively bullish stance of OPEC Plus countries, which are keen to keep a net deficit in the market, at least in words, he wrote, referring to the OPEC countries and its allies. At the same time, a downturn in demand in Europe and weakness in China are balancing the situation. Okay, guys, let's head over to our Forex headlines. View of the week, yen. This is from Reuters. Yen intervention watch, but risk is low. Okay, guys, this is from Thomson Reuters. Last paragraph, we've read a lot about the yen. That said, with USD JPY up roughly 1.7% in the last 2 weeks and the pair rising a little more than 6 big figures over the last month, the move does not meet excessive trigger. In turn, the risk of intervention remains low unless the pair was to see a sharp rally to 163, 164 in the short term. Guys, this is from Reuters. View of the week, yen intervention watch, but risk is low. Okay, guys, some of our crypto headlines. Why Bitcoin is falling as Mt. Gox says repayments for stolen assets to begin next month. From Francis UA, this is from MarketWatch. Mt. Gox holds over 150,000 bitcoins. Investors recouping stolen assets could cash in on the rally over the past decade. Bitcoin fell on Monday after bankrupt crypto exchange Mt. Gox said it would soon start repaying crypto to creditors who lost assets in a hack of the defunct platform more than a decade ago. The payments are expected to start in July and be made in Bitcoin and Bitcoin Cash. The largest cryptocurrency by market capitalization declined 4.5%, that's 4.5% on Monday, to around $61,242, according to Dow Jones market data. It traded at as low as $60,723 on Monday. Bitcoin is up over 45% year to date, but is more than 17% lower from its all-time high at $73,798 reached in March. If Bitcoin falls below its $60,000 trading support range, its next support level is expected to be $51,500, according to Will Tamplin, senior analyst at Fairlead Strategies. Launched in 2010, Mt. Gox was one of the earlier crypto exchanges and one of the biggest digital asset exchanges in the world. It was hacked in 2011 with over 600,000 Bitcoin stolen, and the platform went bankrupt in 2014. Last year, the Justice Department charged 2 Russian nationals with conspiring to launder Bitcoins from their hack of Mt. Gox. Investors are concerned that if Mt. Gox's creditors could choose to sell all the Bitcoins they receive, putting pressure on the crypto, because Bitcoin now trades at a much higher price than it did a dozen years ago. So they're concerned about a supply influx. Still, there is little activity in the July options market, showing that the market is not anticipating volatility around the distribution itself, according to analysts at QCP Capital. Okay, guys, we're going to have just a very brief look here at all of our market headlines and see if there's anything else to mention before we head over to the chart. Nvidia and Meta are 2 reasons why the Dow lags the S&P 500 by double digits. That's from MarketWatch. Market chatter, KKR seeks $20 billion for new North America private equity fund. Okay, guys, we are now going to head over to the charts. Okay, let's first get into our biggest gainers and losers, and then let's look at some of the reasons why I've taken the trade that I have. All right, guys, biggest loser on the day is Bitcoin. Bitcoin currently trading at $61,095 as of 10:45 Central Daylight Time. That is down almost 5% on the day. Investors are concerned that the Mt. Gox, the folks that get their creditors of Mt. Gox, when they get their Bitcoins back, they're concerned that they're going to dump those Bitcoins on the market. So the market has been reacting negatively to that. Natural gas, guys, is sitting at 2.75. That is up 1.66%. Natural gas is our greatest gainer on the day. We did reach an intraday high looking at a 30-minute chart. Intraday high here on Monday was reached around the market open at 2.781. Coming back down a bit, now trading at 2.758, guys. So natural gas coming back off of some of its intraday gains. Let's have a look at our stock indexes now, starting with the ES. ES trading at 55.50 quarters. That is up 16 points on the day as of the making of this video. The ES hit an intraday high just in the first 30 minutes of trading. Let's get down to the 15-minute chart and get to our regular trading hours. Okay, guys, so the ES hit an intraday high of 55. That's 5,558 halves. That's 5558 spot 50. We hit that just on the just after the market opened. So the ES looks like it's currently working in a consolidating or a trading range. The Nasdaq, folks, is down 73.25 points. That's down 0.37%. Let's have a look at Nvidia shares. Nvidia coming back down off of its all-time highs. Nvidia currently trading at 120.31. Nvidia is down almost 5% on the day, down $6.27 on the day as of the making of this video. Currently well below that 20-period simple moving average, riding that lower Bollinger Band lower. However, we are coming up on some prior price action here, some prior lows. So all things being considered, we might have some support around this 120 level here on Nvidia, and that is one of the factors driving the Nasdaq. So guys, the Nasdaq is down on Nvidia losses today. Okay guys, let's get to our bonds. The 30-year bond futures are down. Thirty-year bond futures are down. That means that yields are going up, guys. The 30-year bond future is currently trading at 119 and 21 cents. That's down 0.04 or 0.1% on the day. The 10-year yield, 10-year T-note futures are also down 0.03%. That is largely unchanged on the day. Let's get to crude oil. Crude oil trading at 181.55. That's well above the 20-period simple moving average on the hourly chart. Currently riding that upper Bollinger Band, trading above the second standard deviation upper Bollinger Band. From an ICT perspective, we're coming up on a rejection block. That was our high that we reached on Friday the 21st of June, or excuse me, the close of that candle. So we do have an ICT rejection block at 81.72. So we could potentially run that buy side liquidity or turn around at the rejection block. So reaching an area of a potential pivot here on crude oil from an ICT perspective. Okay guys, let's have a brief look at gold futures. Gold futures are now trading at $2,340 spot 7. That's 2340 spot 7. Gold futures trading up 0.4%. Okay guys, with that being said, I want to finish off with showing you what my position has been on the day and why I took it, guys. So I took an admittedly too large position here on corn futures. The reason why I went long corn is because let's see here. All right, guys. This is 2 hours ago from Dow Jones Newswires. Grains lower, but bargain hunting eyed, and this is from Market Talk. CBOT grains at Chicago Board of Trade grains are lower to start the week, but analysts are eyeing the prospect of a new wave of buying around the corner. Quote, grains might see more short-term technical selling because the charts do not look good as support lines broke, said Naomi Blome of Total Farm Marketing. Quote, however, trade needs to and likely will quickly shift gears into, quote, cheap/low value, and bargain buyers will likely show up soon. Heavy rainfall in northern growing states was seen over the weekend, which could potentially impact crop growth. Early in the season, the most active corn is down 1.7%, soybeans drop 0.7%, and wheat falls 1.3%. So guys, the reason why I took this long, and I'm just going to go ahead and take 5 of these off. Just bank some profit. Hey guys, the reason why I went long on corn here is if we are looking at the 30-minute chart, guys, corn is really beat up. So looking at the daily chart, corn trading below that second standard deviation Bollinger Band, came up and traded right to an ICT rejection block. So here we can see that ICT rejection block. And overall, guys, reading the articles, looking at the weekly chart, corn is really beat up. All of our ags are really beat up. So are wheat futures. You can see that wheat has been just crushed. And so I figure there's going to be some amount of relief buying or pairing of losses in the agriculture. So with that being said, I am expecting there to be some amount of relief rally in corn and wheat, and then also in soybean futures, as all of these grains have been pretty beat up. So looking at the soybean futures, 4 weeks down in a row, trading at that second standard deviation Bollinger Band. Same thing with corn, guys. Corn has been down now, looks like 2 going on 3 weeks. Wheat futures are down, coming on 5 consecutive weeks, reaching some technical support levels. So I'm expecting some amount, probably a relief rally or mean reversion in corn, wheat, soybeans, as the article had mentioned, as I am also seeing on the chart. Okay, guys, finally, let's have a look at the yen. The yen continues to trade down. We did have a spike here in the pre-market session, pretty large spike. That's going to leave some inefficient price action above current market price. Guys, so from an ICT perspective, if you're familiar with ICT, you know that these long wicks are considered inefficient price action from an ICT perspective. So from an ICT perspective, we should be seeing some amount of relief here come in the yen. From a fundamental perspective, we're looking at potential intervention from the Bank of Japan. From a technical perspective, the yen has been beat up. So at some point, I'm expecting a large pop, a relief rally, potentially on intervention from the Bank of Japan. So I'm really eyeing along on the yen, but maybe not now. So with that being said, guys, the only position that I have here on my Topstep 150K simulated account is long corn. I'm long corn. Okay, guys, I want to thank y'all for stopping by. As always, this is Our Trades wanting to thank you for liking, commenting, subscribing, engaging with the video, and using the affiliate links in the description box below, guys. In the description box below, you can find affiliate links to Apex Trader Funding, Topstep Trader Funding, the Trading Pit, and American Express Blue Cash Preferred credit cards. Get 6% back on your grocery, guys. It's a good deal. You can also find an affiliate link to Tradingview, these beautiful charts that are in front of you. With that being said, guys, I appreciate it, and this is Our Trades, ending the video at 10:53 Central Daylight Time. Want to thank you again. Please make sure to like, comment, subscribe.